Hey everybody, this is John Carter with Absolute Wealth, and we're going to go ahead and take a little bit of a video rendition of the markets as we head into the FOMC meeting, which is going to be tomorrow on Wednesday, and just want to kind of take a look at where we are right now, the different things that we have going, the market forces that are at work here, because this is a fascinating market to be sure. And one of the things you guys have to be aware of too is that all markets right now are very highly correlated. Okay, there is really no individual movement anymore in the markets. Like if the S&Ps are going higher, that's going to impact oil, it's going to impact the Australian dollar, it's going to impact the euro, it's going to impact gold, etc., etc. So we're going to spend a little bit of time here just looking at these correlations and seeing how they work. Now the first thing is one of the things I'm hearing a lot about right now from people is they're very, very scared about the markets. You had this nasty sell-off here. In fact, we got down as low near 1260 on the S&Ps, and this is the S&P futures, by the way. This just is a rendition of, it's very similar to the cash index as well. Okay, and when you look at something like on the S&P futures, I kind of like to look at the futures just because they also trade actively after hours, and I can see where they're trading at that particular moment. But when you're actually trading, I'll actually go and do trades on the cash index, meaning whether it's the spiders, doing call options on the spiders or something like that. All right, so here's the cash S&P 500. You can see here a nice breakout. All right, so what's going on here? So the news is really, really bad. A lot of people here got extremely bearish here when the markets came down on the cash level here about 1280 or so, and I know a lot of people who got aggressively short this market, and right now those people are in a lot of pain. And a lot of people I talk to right now actually think they're betting lots of money that, gosh, the news is so bad, Europe's so messed up right now that this market is going to roll back over and die. Okay, and I actually disagree with all of that. Okay, so why is that? Well, let's look at a couple of different things here. The first thing I want to look at is the Aussie yen. Now, this is a currency pair that just tells us what hedge funds are doing. Okay, and at this point, you can see here when we spiked lower, this is a leading indicator, by the way. As this is edging higher here, guess what? I've actually only seen about one day in the last 400 trading days where Aussie yen was higher, like here, and stocks were lower. Okay, why is this important? Because this is telling us what the hedge funds of the world are doing. To make a long story short, if Aussie yen is going higher, that means hedge funds are taking on risk. They're initiating carry trades. They're buying assets with these carry trades, okay? And that means that most assets go up when Aussie yen is going higher, okay? So money flows out of bonds and into everything else. And vice versa, it's the same thing. When you see, right here, Aussie yen makes new lows, guess what? That's telling you, gosh, hedge funds are getting nervous here. They're dumping things, and you're going to see everything else dump as well, including stocks. What I like about this is the hedge fund guys have a lot of access to information. If they have a reason for wanting to get out, that's a pretty good one. So right now, even though the news is bad, okay, even though the news right now is horrible, hedge funds are aggressively taking on risk here. You can't ignore that. And I actually think we're going to see some more upside in the stock market. Okay, and let's go back here and we can take a look at the Dow Cash Index. The Dow Cash Index, obviously the most popular index here. A lot of people know about this one. Right now, you've had a pretty decent retracement off the highs. So you had this swing high up here, all right, down to this swing low, and now we've retraced 618% of that. That's a very, very healthy retracement. Okay, a weak retracement would be you come up to the 382 and you get crushed. But the fact that we've gone up to the 618, that's pretty positive. And at this point, I would expect a little bit of consolidation and friction at this level. But I think it's actually conceivable here that this market could actually could continue going higher here and get past 13,000. Yes, the market news out there is negative. Okay, I don't deny that in any way, shape, or form. But the market is always right. All right. So the thing about the markets is they tend to price things in advance. Now, there are some stocks out there like Baidu. This was one of my favorites for a while. It's not looking too hot right now. Okay, so there are some stocks out there I'm not a big fan of. I do like that we got a potential head and shoulders bottom here. We've got a squeeze. If this thing triggers long, this thing could have a nice move, but you can see here there's a lot of resistance there. What I'm looking for right now are stocks that don't have a lot of overhead resistance, okay? Stocks like Walmart. Walmart here is in new high territory. It's just kind of consolidating here. It's hanging out. A lot of stuff going on there. You have the Mosaic Company. This stock is on the move here. You can see it's been blowing through some key resistance levels here, and I would be wanting to look at pullbacks here. Okay, if we look at some other asset classes, gold and silver I like to take a look at quite a bit. Silver here has been very quiet, very negative. I think silver will have its day in the sun coming up, but it's not going to be anytime soon. Look for silver to be quiet for the next 6 months. Same thing with gold. Gold here actually has been a leading indicator for what the hedge funds are doing. Gold got dumped first, okay, and then stocks followed later. Now you can see gold here trying to kind of chew its way up and trying to break through. If gold can actually break through this upper level here and break out here, we're going to see actually stocks have a fantastic rally as well. Okay, all these assets are moving together right now. That being said, I think gold's going to have a pretty tough time kind of chewing through this. What was interesting today is that gold was down and the dollar index was down as well. Okay, so you're seeing a lot of shuffling here in these various asset classes. Of course, with everything that's going on in Europe, you would think that the euro would be getting crushed here. Well, overall, it's been crushed, but guess what? The market, just doesn't like surprises. The euro here is actually priced in the euro crisis, and now it's kind of like, all right, let's just kind of get back to what we were doing before. So the main takeaway here is just don't get too wrapped up into what you're seeing in the news. You've really got to take a cue from the markets to see what's going to happen next. All right. Now tomorrow we got FOMC. The S&Ps are essentially lining up here right at some key resistance levels. Okay, we've had a nice move up to this level. You can see here we've got some levels right here, and this is exactly where we've stopped. And this is what will happen a lot of times before these major reports. Okay, you came down here, that was support. It came down, tested again, that was support. Now once it broke through it, it became resistance. Now where are we again? We're at resistance. And what happens a lot of times is before a major news announcement like the FOMC, the people who are bullish and the people who are bearish come to a compromise, and they've compromised and said, all right, you know what, we're going to settle here. We're going to wait right here and see what happens. Okay, fine. For shorts, they're willing to concede a rally to this level. Bulls are willing to bid it up to that level, but nobody's willing to push through it until they see the FOMC meeting. So for tomorrow, if you're watching this, if you're watching the markets live, here's the things you want to watch. First thing is you want to watch Aussie yen. Okay, if Aussie yen pushes higher, guess what? Stocks are going higher too. 10-year notes. If 10-year notes here, if those right now they've been trading kind of sideways. If they explode higher, that's not a good thing for stocks. If these explode higher, that means people are panicking. They want safety. Okay. What I would want to see if we want stocks to go higher here is T-notes just kind of yawn. They continue trading sideways. There's enough uncertainty in the world right now where I don't think they're going to collapse. But if they trade sideways, that means money is not flowing into bonds. Okay. They're just holding steady, and we can see money flow into stocks. All right, so that's what we got going on for FOMC. I think it's going to be a pretty fantastic and interesting day. And you guys have good trading, and we'll see you at the next update.